Great weekend, sunshine all over the place, and now it's cooling and down slightly at least, and that's the same what we might expect in the equity market at the moment. Guys, we created a new all-time high in the S&P 500. The Nasdaq keeps rising, the German DAX keeps pushing to the upside as well, but oil prices might tell us that something could still be brewing in markets. What to focus on this week? We got the Royal Bank of Australia, and the interest rate is expected to be raised to 4.35%. That obviously kind of tells us that inflation worries, but also real inflation out of Australia kept pushing higher. CPI, Consumer Price Index, last week from Australia was again rising, not as much as expected, but still way up compared to previous month movement. And obviously, energy prices are basically a big burden. Keep in mind, Australia is a huge exporter of wheat across the globe, but obviously in the Eastern Hemisphere for sure. And that kind of continues to impact markets as well. So with the rise or with the rate hike potentially, which is expected currently, markets might also be prepared for the Australian dollar to rise further. It's expected, but if it kicks in, it could push the Aussie towards higher levels, which on the upside, on the flip side, obviously kind of might also cause market motivation to change direction. The Australian dollar has been rising as said, and we saw this alongside, and that's the Aussie US dollar currency pair here, alongside a slight weaker US dollar, we saw that the market motivation here was quite interesting, and the technical recent resistance area has been giving way here, while now the market seems to do the exact opposite. Again, we see that the market's weakness could be on the cards for now. So watch out for technical resistance zones. A break above the high point here might push the market higher, while depending on how we close on Monday, the market actually on the flip side could weaken even further, pushing this market sentiment back towards lower levels as well. So that's the interesting market we like to take into consideration heading into later on this week's most important interest rate decisions on Tuesday, but heading into the non-farm payroll report on Friday. Let's push back to the calendar, the economic calendar. We see that the NFP data is expected only with 60,000 newly created jobs. That's really nothing much compared to what we've seen in the past, 100, 150, 200, 250,000 jobs on a monthly basis. We are far away from that. And the recent data point from April, well, April and March data was somehow a bit blended into each other, we might say here, looking at the data points there. But if the number kicks in slightly weaker than the forecast, 60,000, we could see the US dollar is obviously kind of changing direction as well. Now, on the chart, we have the dollar index, and we can observe that Friday's movement here with the market basically Thursday and Friday pushing lower helped equity markets. The dollar index pushing lower, stocks are relatively cheaper from the outside US expectation or perspective, and that's simply what helped the S&P to rise on Thursday and Friday. The Nasdaq, same story. Any equities, any stocks from the US, obviously. But now the market's trend might be reversed, and we observe that the strength of the dollar index here could tell us that markets might change direction as well. The old saying, sell in May and go away, might also kind of happen or cause some negative input here in this month, because the quieter summer month, usually starting in May, June, July, usually cause markets to be at least relatively volatile compared to other months in the year. And that's currently what's happening and what might kind of change the direction in general. We see on the flip side that precious metals obviously are inflow or impacted as well with the current moves. And what we observe is that silver and gold both are pushing back towards lower price ranges. Starting with silver, we observe that the market keeps trading slightly below this 50 moving average, which naturally and oftentimes had been an important guidance for the outlook. Any break above might cause the market to push higher. Any push towards lower levels, as we can observe it here, which is currently the interesting market, right? So we are currently trading at shorter time frames here with a daily chart, which might tell us that a change in direction to the downside might just continue or might happen. Looking at the weekly chart, we see the same. The market has been kind of likely pushing higher all basically last week, but then went to the upside again towards the end of the week, and now we see sideways trading pattern. In any case, gold prices are relatively weaker comparing it with the silver market. Just pay attention to the 50 moving average. When I flip both charts, we observe that the daily chart here in silver is kind of quite close to the 50 moving average, while the 50 moving average in the gold price chart is quite far away, telling us that in this case the silver is in slightly higher demand comparing it with gold. But the bigger factor might just be the fading of geopolitical tensions. The US seemed to kind of withdraw the aircraft carrier, an aircraft carrier from that Middle Eastern region. De-escalation focus, basically. Talks between Iran and the US might kind of get more valuations now, because Trump stated he will check whether a potential ceasefire, the truth, and any peace deal might actually be accepted. While on the flip side, Iran might have not to lose as much as the US if the war will be ongoing in that area. One thing to keep into consideration is obviously as well in all that big story and conglomerate of things, the oil market. And oil prices have not been weakening much. Well, oil has been pushing back to lower price levels. That's what we can see here in the charts. US oil basically kind of looking negative. However, the market stabilized right on top of this trend line here. And this tells us that the market might just be ready to break higher again. Any flaring up of geopolitical tensions could tell us that the upside might basically inhibit growth in equities. Sell in May and go away could cause negative input as well. Stronger dollar, if it returns back, could push this market as well back to the down, could push stock markets back to the downside, whereby the oil market is kind of quite interesting, as the charting pattern really tells us right now. So the change in direction as well in the focus is also visible at the moment, where retail traders focus on Nvidia, Tesla, and the like AI-based or AI-related stocks rather more, as compared to the smart money, which is more focused on geopolitical tensions, on movements of the dollar, on rather kind of energy-related stocks, which had been, by the way, moving up nicely as well. So the focus is just different and telling us how the markets might move in the future. Smart money using obviously the any correction in the equity market to basically get themselves into cheaper positions, or getting themselves into positions at a cheaper price. Looking back at the S&P 500, we can name a few areas of quite some high interest here. The recent breakout in the S&P, and no, it's not bearish, but the market might fade with this strong rising momentum. The MACD indicator kind of went back all the way towards positive territory. But what we can see is that the market might start to deviate slightly and pushing back to the previous and recent breakout area. Such level of engagement quite often leads towards, if a correction comes, a strong support. And we've seen this several times in the past when looking at previous market moves, right? So based on the days in the past here, we could see long-term trend resistance. It was broken, the market up and running. Then the market fell and kind of tested this exact same area as support. And that's simply what we could see as well here at some point. Meaning to say that this technical resistance area here, which was not tested, would have been in just a nice support area in case the market will fall again. Meaning, in this case here, we would like to pay attention to that zone. Doesn't mean that the market is going to fall, but any correction, any bigger correction at some point in the future might offer us or help us, giving us some entry opportunities at such zones. What else to observe? We see in the crypto space that Bitcoin has been rising again, and fairly recently the weakness of the dollar, as we said, Thursday Friday last week helped as well, and that Bitcoin was able to return back to higher levels again. Cryptos were correcting earlier last week, but then towards the end of last week, starting to appreciate. And this tells us now that the upside momentum here likely driven, I don't get the exact numbers, but likely driven also by the demand in the retail space here, looking quite interesting. We've broken away. This was the recent support, now turning resistance, but this resistance has been retested and now we are breaking higher as the zone had been defended. So if Bitcoin is able to rise further, then we might see that this positive trend is due to continue as well. Monthly charts look quite cool. We observe here that the market has been breaking away or breaking higher, especially the bullish close in April, breaking above the March high point. March candlestick, April candlestick, April closed higher as compared to March. The trend totally reversed. We saw the market basically breaking higher as compared to this downtrend. And now we could see indeed that the market will continue with its bullish momentum, bringing maybe bit of a surprise, but bringing maybe Bitcoin back towards the old higher points. The altcoin market is just not as bullish as Bitcoin, as we see Ethereum kind of pushing also slightly higher, but XRP already kind of stabilizing, not falling, and Solana, Cardano, and the others, the bigger tokens, are not really gearing up some momentum, as most of the liquidity still flows into the Bitcoin market, leading the market to the upside. Guys, focus on the upcoming news events this coming week. As we stated, we will actually keep the markets and the news in consideration and in focus as well. Obviously, starting with the RBA tomorrow, rate hike expected, and then the huge news on Friday with the non-farm payroll report. So let's see how this one will influence markets. Just don't forget to subscribe to our channel, leave your comments under the video as usual. Stay tuned. See you then. Bye.